Many thanks for joining us. This is Business Incorporated on Channels Television. I'm Chimezie Obi Iwawo. Coming up on the show, Airtel Africa drops 12.5% in early trade after London debut. Shell and ExxonMobil eye re-entry into Somalia's upstream sector. And of course, we'll meet a Cameroon mechanic who makes his own vehicles and dreams of building a tractor. First, we'll start with the markets, and the Nigerian all-share index appears to be on course for another negative session with a decline of 0.20% as at intraday. In South Africa, the JSE index was up 0.21%. The Egyptian market is closed for the week but surged 0.67% at the end of Thursday's session. Kenya was 0.03% down also on Thursday. In the Middle East, markets are closed as well. However, on Thursday, Saudi stocks rose after the kingdom relaxed its limit on foreign share ownership. Other Gulf markets also gained after falling in recent sessions amid political concerns. Saudi stock index was up 1.26%, with banks leading the gains. The Abu Dhabi index edged up 0.72%, while in Dubai, the index was up 0.13%. Qatar's index traded 0.27% higher as petrochemical maker Industries Qatar and Qatar Islamic Bank each rose 0.6%. And the European markets opened fractionally higher on Friday as investors tracked developments at the G-20 summit in Osaka, Japan, where President Donald Trump and Chinese President Xi Jinping are expected to meet amid the ongoing trade war. Let's talk to Ashutosh. Good afternoon, Ashutosh. I would say, thank God it's Friday. Well, it's been a rainy day here in Lagos. How is the weather out there in Frankfurt?
Good afternoon, Chimi. Well, it's bright, hot, and sunny here. And yes, thank God it's Friday.
All right, G20 has gotten underway in Osaka, Japan. The summit is expected to be overshadowed by the much anticipated meeting between U.S. President Donald Trump and Chinese President Xi Jinping. What are investors expecting?
Well, Chimi, there is a sense of cautious optimism, as you can see from the DAX behind me. Most of the European markets are similarly marginally up, as you just mentioned. That's because the traders are hoping that there would be a temporary truce and perhaps a roadmap that how the talks are going to go ahead. But if this is achieved, then that's going to be a boost for the markets when we come back on Monday. So that's something that the markets are looking at. And there's more piece of news from the Eurozone. The Euro inflation came in at 1.2%. Now that's well below the ECB target of 2%. But people are also concentrating on core inflation. Core inflation did go up, and that's a little positive for the ECB. But overall inflation with 1.2 and still well below the target of 2%. And analysts are now thinking that it could be it may well be that the ECB is running out of firepower because there's just this much it could do. And it has already said that it is going to maybe come up with stimulus if things go from bad to worse here.
And on corporate news, Volkswagen truck unit Traton went public today. What's the car maker's thinking behind the decision to split its truck unit?
Well, Chimi, I must say it was a brave decision by Volkswagen to list its truck unit, Traton, at this point of time because there is so much uncertainty in the market as well as in the automobile industry as well. But the idea is that Volkswagen is looking at slimming down. It has been expanding at a massive pace for decades now. It's become too big and too inefficient also, some would say. So the idea is to become more efficient. Then there is also the sense that perhaps this IPO is going to insulate the profitable truck division from the problems that the car maker is facing as far as cars are concerned. There's Dieselgate that's weighing on sentiments. The car sales are slowing down. And all this has been weighing down on the value of the shares. So the true value is not being reflected of the truck unit because the truck sales have been stable despite US-China trade dispute. And there is also the factor that it is going to get 1.5 billion euros from this IPO, and that's much needed money at a time when the car maker is investing heavily in next generation mobility, in electric vehicles, in autonomous driving, and so on.
And do you think Daimler could follow suit?
There are definitely some suggestions by analysts to this regard. They say that the Daimler should in fact consider, because Daimler's car truck unit is massive, it's huge, and it is double the size of Traton, and it is doing quite well. But even Daimler, the car division, is facing too many troubles. The Dieselgate, the car sales are slowing down. We did hear earlier this week that how it had taken a cut in its profit outlook for the third time in a year. So clearly there are several problems on that front, and analysts feel that if the truck unit is split from the main organization, that's going to actually unearth the true value, and investors will be able to attach a real value to that truck unit.
All right, Ashutosh, let's continue to follow up on that G-20 summit on the way there in Japan. Thank you for your time, and enjoy the rest of the weekend. In the UK, Airtel Africa shares fell as much as 15% in early trade on Friday after its London stock market debut, hitting a low of 67.5 pence against an initial public offering price of 80 pence, while the company, a unit of India's Bharti Airtel Limited, last week set a range of 80 to 100 pence per share for its IPO before pricing at the bottom of the spread. Well, let's cross over to our London studio now. Juliana will give us more details on this and more. Hello, Juliana. It's a cold day here today. Wondering what London looks like.
Gosh, well, it's sweltering in London and across Europe, so we're pretty hot. We've taken the weather over from Lagos and brought it into London today, I must say, Chime.
All right, let's talk about Airtel Africa. Of course, that company listed on the London Stock Exchange has started off on a negative trading note, down some 16% on debut. Bring us up to speed on this.
Well, yeah, this isn't great news for Africa's second largest mobile operator. Shares dropped sharply today in a very disappointing debut for Airtel Africa. The group had actually priced its initial offering at a valuation below what was secured in two recent private funding rounds, but stock still fell 22% to below 70 pence, which gives it a market capitalization of around £2.7 billion. Shares had been valued at 80p, the bottom of its previously announced 80 to 100 pence, which you just mentioned, but the value fell way below that, making it among the worst debuts on European exchanges this year. Now, some analysts suggest that Airtel Africa may be suffering from much broader investor unease about telecom carriers in emerging markets, while others are connecting it with its parent company, Bharti Airtel, which is struggling back home in India with a years-long price war and mounting debt. So definitely not good. Hopefully it will pick up next week.
In other corporate story, Merlin Entertainment has okayed its acquisition by the investment vehicle of Lagos founding family and private equity firm. Tell us a bit more about this deal.
Well, yes, the Danish billionaire owner of Lego, Kurt Christensen, has expanded his already massive empire by snapping up Legoland and Madame Tussauds, their owner, Merlin Entertainment, in a deal that has cost £4.8 billion. Merlin also owns the London Eye, Alton Towers, and Chessington World of Adventures, which are big names for anybody in the UK or anyone who travels here. Under the new owner, this UK attractions will still remain open. Now, the sale will mean that Merlin shares will be delisted from the London Stock Exchange, which it floated on 6 years ago. Now, this is good news for the group. They faced some very high-profile struggles in recent years, including an horrific crash in 2015 on one of its Alton Towers roller coasters, which severely injured 16 people. Now, these troubles that they've had in the past means that the price agreed for the deal is much lower than what it would have attracted about 2 years ago.
All right, from G20 meetings to OPEC meetings on Monday, what are the market-moving headlines are you watching in the new week coming?
Well, the big word, Jimmy, the big name is Trump, and he's already made it abundantly clear that his priority at the G20 summit is to boost the US economy. And we're likely to see that same sentiment going into next week's OPEC gathering in Vienna. There's certainly an air of diplomatic urgency going into next week. Tensions between the US and Iran are much higher than anyone would like, and it's keeping the markets on edge, particularly here in the UK. Now, Iran are a significant actor within OPEC, and this was made abundantly clear in recent weeks when those two tankers were attacked off the Strait of Hormuz, through which 40% of the world's crude shipped by sea passes. But let's quickly have a look at the numbers before you go. The FTSE appears to be making progress, albeit at a slow pace. The all share is up by 0.32%. The FTSE 100 is up by 0.31%, and the FTSE 250 is up by more than 0.5%. Now, in currency, sterling is trading slightly higher against the US dollar and the Japanese yen, up on the dollar by 0.13% to $1.26, down on the euro by 0.01% to €1.11, and up on the yen by 0.02%. Thank you very much, Jimmy.
Thank you, Juliana. Well, it's time to say thank God it's Friday. Enjoy the rest of the weekend. And in Asia, stocks and Pacific Asia dipped on Friday as investors watched for developments from the G20 summit in Osaka, Japan, where U.S. President Donald Trump and Chinese President Xi Jinping are expected to meet amid the ongoing trade standoff. In Japan, the Nikkei 225 slipped 0.29%, while the Topix also shed 0.14%. Mainland Chinese stocks slipped on the day, with Shanghai Composite lower by 0.6%. The Shenzhen Composite also shared 0.9%. Hong Kong's Hang Seng Index declined more than 0.3%. Over in South Korea, the Kospi ended its trading day 0.17% lower. And the U.S. stock index futures were higher on Friday morning as traders await a key meeting between U.S. President Donald Trump and Chinese President Xi Jinping at the G20. Trump and Xi are expected to meet on Saturday amid their ongoing trade conflict. The world's two largest economies have maintained firm stance going into the weekend, with the Chinese Ministry of Commerce calling on Washington to cancel its pressure and sanction measures on Huawei and other Chinese companies, while Trump reiterated a threat to impose tariffs on all Chinese imports if talks fail. On the data front, there will be personal income figures, consumer spending, and a core personal consumption expenditures price index released at 8:30 a.m. Eastern Time. And away from the markets there, Royal Dutch Shell and ExxonMobil are looking to re-enter the market in Somalia ahead of an oil block bid round taking place later this year. Shell and ExxonMobil had a joint venture there prior to the toppling of Mohammed Said Barre in the early 1990s. Somalia has been mired in insecurity since Barre left and is battling Islamist group Al-Shabaab that frequently carries out bombings in the capital Mogadishu and elsewhere in the country. The country recently does not reduce any oil, but production could transform the economy as early-stage seismic data has shown there could be significant oil reserves offshore. The parties have also agreed a plan to convert their old contracts in line with the new petroleum bill that was passed earlier this year. And on global oil market, prices were steady on Friday, with focus shifting to the G20 summit, where a scheduled meeting between U.S. President Donald Trump and Chinese President Xi Jinping has stirred hopes that trade tensions could ease. Brent crude futures were up 0.2% at $65.68 per barrel, while U.S. West Texas Intermediate crude futures were down 0.02% at $59.44 a barrel. The leaders of the G20 countries will meet on Friday and, of course, Saturday in Osaka, Japan, but the most anticipated meeting is between Trump and Xi on Saturday. A trade dispute between the world's two biggest economies has weighed on oil prices, fanning fears that slowing economic growth could dent demand for the commodities. We'll take a quick break now, and when we come back, of course, we wrap up the market week in South Africa. Do stay with us.